Hi, Andrew Bell here, and it's good to be with you once again. Now, May certainly turned out to be a remarkable month. I mentioned in our last report that we anticipated to be one of the best months in some time, and that certainly was the case. $76 million worth of sales across a wide range of markets here on the Gold Coast. There is no question that we detected some nervousness amongst buyers. It comes as no surprise after having an $18 billion deficit budget announced, the stock market going through over a week of daily falls, the Australian dollar dropping by 8 cents, and the normal pre-election negativity starting to intensify. Yet despite this, it's the biggest month that we've seen in over 4 years, because the fundamentals that have kept driving the market came through. And you can see people now looking beyond that and seeing past the distractions. The two strongest drivers at the moment are population growth and the incredibly low interest rates. Now, actions do speak louder than words, and a whole range of people throughout Australia spoke very confidently during the month of May. In our two largest capital cities of Sydney and Melbourne, the auction results are now posting over 80% success on auction day. They're amongst the highest figures that I've seen in my 40 plus years in a real estate career, and certainly suggests that the market is very, very strong. This fortnight, we're going to have a quick look at finance. It's the lifeblood of real estate, but it also, most importantly, is a lead indicator of activity. Finance applications over the past 6 months have been on the rise, not only because of the confidence in the real estate market and the fact that it's on the move again, but naturally these incredibly low interest rates are such that so many people are looking to capitalise on those low rates. Whilst owner-occupiers have been on the rise, it's been the investors who stole the march first, and this comes of no surprise. If you have money to invest, you wouldn't want to leave it in near record low deposit accounts. The stock market is somewhat dangerous as it reflects the volatile and lacklustre economy. So with real estate market at the bottom of its cycle, it's logical choice to invest in this particular market. Interesting, mortgages to investors have been up around 40+% of all loans in New South Wales and over 36% for Queensland through most of this year. Some financiers are reporting a healthy 15% increase in written mortgages. The most recent figures for March show that owner-occupier home loan approvals have posted the strongest jump in 4 years. There was an increase in March alone of 5.8% to cap off 9.3% increase from the start of the year. The Australian Bureau of Statistics, once again, their leading finance data recently released shows that housing finance growth is at about an annual pace of 12%. Now, you often hear about mortgage stress, but rarely are we provided with information. So I've had a really good look at this for you. As a percentage of the Australian mortgages, there are very few highly indebted and financially troubled households. May surprise. The proportion of borrowers 30 plus days behind in mortgage payments fell throughout the year of 2012 down to 1.54%. And by the end of the year, that was a remarkable low figure. We're waiting to see the latest figures, but with further falls in interest rates, I expect the numbers to be lower yet again. Interestingly, 70% of owner-occupier housing debt is held by higher income households. That is, people in the top 40% of income distribution. And typically, those people have lower debt to income and debt servicing ratios. There's a relatively small share of low income households, that is, people in the lowest 20% of income distribution. However, sadly, those that do tend to be in that group are quite heavily indebted and with little prospect of salvaging their situation. Recently, the Reserve Bank of Australia estimated that approximately 50% of all mortgage holders are ahead of their mortgage payments, with over 40% of borrowers more than a year in front on their repayment schedules. Quite remarkable. Another recent report showed that 69% of the Commonwealth Bank customers, 59% of Westpac customers, 49% of ANZ customers and 45% of NAB customers are ahead on their mortgage payments. A good strong position. Given the large share of households with mortgage repayment buffers, along with the current relatively low unemployment levels and moderate income growth, most households appear to be well placed to meet their debt obligations. The Fitch Rating Report on residential mortgages has given the Australian property sector a clean bill of health, with our mortgage defaults amongst the lowest in the developed world. So with low interest rates and rising incomes, as announced with last week's increase in the minimum wage, plus low default mortgage situation, this should give comfort that it is really a good environment to be borrowing money for either a new home or an investment. The current loan applications suggest that there is still a strong stream of new buyers entering the market, so expect the recovering property market to continue along its journey. One can only imagine what will happen post-election and of course moving into our spring season. Well, this is the last report for the first half of 2013. Hasn't it flown? Yet so much has happened in that period of time. I still have lots of information to share with you. And we'll start to look more closely at the state of Queensland, which is really relevant after our recent budget announcement. And of course, a big focus on the Gold Coast, where so much has changed during the course of 2013. Oh, two other things. First of all, thank you for all those who sent in their thoughts about the photo last week. It as was suggested by so many people on the beachfront at Surfers Paradise, and it was back in the 1950s. We've got on screen now the next photo we'd like to share with you, and we'd be interested in your feedback, and you can see there where you might email back your comments. The last thing, excuse my voice over the last few months and maybe the next couple of months. I learned only this week that I have a hemorrhaged vocal cord, and it just does take some months to recover. Well, that's it for now. All the very best, and look forward to seeing you in a fortnight's time.